Welcome to the Winnie Podcast. This show is focused on empowering ranchers. Whether you're a seasoned rancher or just getting started, we'll guide you on how to use the infinite banking concept as an alternative way to finance your operations. It's a better way to think about money. Join us as we discuss planning for the future, attracting the next generation, and the art of keeping more money within the family. Here's your hosts, Winnie and Lacey.
Welcome in, everyone. We are back for a valuable and informative session with Taryn Smith today, and she has kindly said yes to be here for all of you ranchers and farmers, because we're here to probably just really solve for something that is a huge problem amongst keeping our staff. So she's just going to help really uncover so much of that for us and more. So Taryn, please introduce more of who you are, and then we'll get started.
Sounds great. Thanks so much, Winnie. My name is Taryn Smith. It's so great to be with you all. I work for Edge Benefits. We are a third-party administrator for insurance products, so we get to bring you a whole bunch of products that make a ton of sense for the self-employed market. It's a great fit for the farming communities, and hopefully we have some really simple and affordable and flexible solutions that'll be able to help you with your businesses. So my goal today is to go through a few of the pain points I know a lot of people have, and we will be able to present to you hopefully some solutions that you didn't know were out there. And I'll get right into it. So we're going to chat a little bit about our farming packages today and some of the options that you would have. So we're going to start with some of the things we know are coverage challenges. We know that the insurance world isn't always designed for every community, and this is certainly one that has some gaps, as we know. So let's take a look at that. So there is limited coverage available for farmers, as generally there's a massive part of this market that's deemed self-employed. When you're employed, it's very clear. You have employment insurance and CPP and WCB and generally group coverage and some individual built in. When you're self-employed, you don't have EI. That CPP isn't there. WCB you could have, you don't need it. We all know in this market now it's a little optional. Group coverage, unlikely. So your only plan here is to potentially have individual, and then a lot of people don't even have that. So we want to make sure we can show you some of these solutions. Another side is that a low net income could qualify for little monthly benefit. We know that at the end of the day, people take a lot off the top to get to that low net to pay a little bit less tax. We have a lot of business expenses, but those are still expenses that are supporting your life and your family and your farm. So we want to do our best to make sure that those are the funds that we can protect for you. So we have a way to value it that's a little bit higher to make sure that you can make more of that money than just what's at the net based on that low monthly benefit if we calculated it the traditional way. We know in this field, a lot of pre-existing health conditions could disqualify you from coverage. Almost all of our products are a guaranteed product, meaning it doesn't matter. We will write it today and it can start for you tomorrow, no matter your current condition. We also know family-operated businesses have struggles. Sometimes someone will talk to you and be like, oh, it's all family? No, we can't help you in that market. We don't have that limitation. We're happy to take on an entirely family-run business. And then on the other side, a lot of the time people will chat with you maybe about protecting yourself and an income protection, but what about expenses? Because the last thing we want to do is to put some money in your pocket, and then at the end of that day, that money's just going right back out for expenses. We have a two-tiered approach that can protect both your expenses and your income to put you in the best financial position should something occur. And things do occur. We have a great example of that coming up right now. So we have a client testimonial of someone who has shared their story with us to give you an idea of the impact these policies could have. Unfortunately, this is one on the other side. But we don't need it. That is the usual answer I would get from my ranching husband about getting a life or disability insurance. In the last year, we spoke about it again and again, and he replied, I won't get hurt from anything that will stop me from working. And now you really sound like an insurance salesman. I take that a little offensively. We do our very best. But as farmers and ranchers, we work with big equipment and unpredictable animals, and most of us have injuries that heal, and we keep on working. I know my husband is not reckless, and he took his safety very seriously, as he has two beautiful girls he wants to see grows up, and he enjoys riding out checking the cows.
Can I just insert here? This is a great story, but I would err on the side of like, most people don't even know that this is an option. Like when we're employed, yes, we have those benefits that come with being employed. I think most of our listeners, and maybe I'm just going to speak for the general public, don't even know that this is an option. So when we talk about always be open-minded and willing to learn something new, because this is an option that you very well are not even aware of.
Yeah.
So
yeah, these are those solutions that people don't always talk about, because it's something that is kind of a conversation to have and to open the doors to. But hopefully being able to show some of the examples of when it goes wrong, you can see that there are protections out there that can help you if that were to happen. And it doesn't have to be a catastrophe for you and your family.
Right. Perfect.
Yeah.
Thank you.
So in this situation, it was in January 2019, and it had been an end to our ranching lifestyle as we know it, and it had changed our lives forever. A farm accident has made my husband a paraplegic along with other related medical conditions. We calve early in the year in hope of making more money in the fall as we're young and healthy, and hope more pounds will make higher fall prices. All of a sudden, we had to sell 90 head of our commercial Red Angus herd immediately. How can I and our 2 girls calve in the cold spring with me working full time? Gone is half our herd, which took us over 15 years to build up. The loss is not only economic, but emotional too. My strong, independent, and active husband is dealing with being paralyzed and living in a wheelchair. I can't explain the feelings and concerns we've had to deal with now and how he is coping. It's so hard to imagine.
Yeah.
We have always struggled with finances and in the cow business, and that is one of the reasons we did not purchase this insurance. And this is a situation where she was aware that this existed, and so was her husband, and unfortunately they made this decision. But now we have costs that we never saw coming. We have to rent a home in town that's wheelchair accessible, and he's living alone with moderate home care support. We are torn between our commitments and the love of our ranch, and we don't know what lies ahead. And to think that we could have had $5,000 a month in an accident disability insurance to age 70, a $5,000 a month business overhead expense for 2 full years, plus $300,000 upfront to assist in the remodeling of our home, an accessible van, or whatever else we would have needed in that regard for less than $270 a month. It's hard to fathom how that sounded so expensive at the time. So rethink that you may not have been able to afford that insurance, please. This was her desperate plea that she wrote to us after this occurred. So,
That's so heavy. It's so heavy hearing about all this. And so I think most of our listeners are typically just listening to us. So this session is actually one where it's also quite visual. So I'm sure you'll get a lot out of listening to the rest of our session today. But if you can and want to come back later on to help you wrap your mind around so much of the information that we're about to cover, visual, come back and watch us, like see this visually.
Yeah, find us on YouTube.
Yeah. Okay. So that's our testimonial of a scenario where the client wishes that she had coverage. She is a client now, of course, which is great, but we could have been able to help this family so much before something catastrophic occurred. So keeping that in mind as we have the rest of this discussion, hopefully you can see some of the value and some of the gaps where this would have been a wonderful solution. And maybe it's a wonderful solution for you and for your family. So on the flip side of that, there is a coverage that some people have, not everybody, but WCB. It is something that we broadly talk about. I know that it's not mandatory in the sense that you can have other coverages now, but people do need to understand how it works because it does have a lot more gaps than people are sometimes aware of. So we're going to be talking really in general terms as each provincial coverage is different. At times I'm going to reference Saskatchewan based on a calculation. Other times it'll be based on Alberta. But all information we reference here is from the WCB website, and it's accurate information as of today. This information can change at any point from the province that it's issued by. So just a disclaimer that we're only active in today's conversation about this.
Okay, so let's be clear about this. As of at the time of this recording, it's October 4th, 2025. So
yeah,
we'll just keep that in mind.
Now, when people think of WCB, you generally have 2 points of thought. Some say that it's all the coverage that they could ever need. Other people think that it's a waste of money. Both of those answers are incorrect. It definitely does fall somewhere in the middle. So when we look at it, it's a disability coverage that covers injuries only and on the job only, as well as occupational illnesses. And that on the job only is very strict. People need to understand that they do mean on that job, on the log, on that working site, no in between. It is a piece of legislation. It's not contractual, and claims are made on an administrative basis. So that means what decisions made by someone today might not be the decision made by someone in a week from now. It's a very hard precedent to follow. The rules are a little bit gray. Everyone has their own interpretation of it, and it makes it very hard for people to be able to anticipate what's about to occur. And the adjudicator in it, in each province, in each city, in each instance is different. So I want people to keep that in mind. If you've heard of great stories, that's wonderful. We just can't guarantee that'll be your great story if something were to happen. Now, it is a mandated coverage for most workers in designated occupations, and it's based on 5 cornerstones. This is how it's been designed across the country. In every province, they have the same 5 cornerstones. No fault compensation, collective liability, security of payment, exclusive jurisdiction, and an independent board. It is designed to be a transparent board, very clearly no compensation for the employer or the employee. It bears everyone's weight of liability. It's very clearly designed that way, which does allow it to have some flaws. Now, looking at this exactly a little bit more in depth, it has 2 trains of thought. It has it for the worker, protection against loss of income, medical and rehab services to get them back to work. And for the employer, it's for risk management. Generally, if you have WCB and something happens, you can't be sued. Generally. It protects the business that way from accidents on the job, and it needs to know that someone on their job site's either covered by WCB, or if not, they could look for a comparable coverage. The problem lies here, that in this industry, a lot of times you're both. You're the worker and the employer, which leaves you a little bit in the middle. It doesn't give you a clear advantage to this program because you aren't just a worker, you aren't just an employer, and you can't really put in the same claim against yourself. So it's important to understand it has its values in many industries. This is one where it makes it a little bit more difficult for those who are self-employed. Now, there are different objectives when you look at a WCB versus a disability policy, which is what we're talking about here with loss of income. WCB is designed to help an injured person get back to work with medical help, with rehab costs, maybe prescription drugs. It's going to pay them based on their injury and their income. So their goal is to get you back working. That is what WCB wants. Their goal is to get you back no matter what. Sometimes it can be rushed. They can have certain requirements. You have to see their doctors, their practitioners, follow their rules, right? The disability portion is different. It is designed to replace your income. So it's not here to tell you how to do it or what to do. We're going to reimburse you medical costs. We're going to help pay for approved rehab training, and we're going to pay you based on income and the duties of your job. So it's designed in a different way where we're here to pay you your income, and hopefully we can help you get back to work, but that is not the driver of the policy. Now we're going to talk through a scenario, so I want people to really understand some of the gaps in WCB here in this very specific sector of the self-employed world. Because we know in this industry, gross and net and the benefit you think you're getting and what you're paying for are not always the same. So I want people to very much so understand. And if you choose to still have WCB or you still have to have it, I want you to be able to make better decisions if you have that opportunity and to be making sure that they're not doing something in the background you weren't aware about. So let's say your gross sales are of $1 million. You have business expenses that you can write off for $960,000. That means your T4 income at the end of the day, your bottom line, $40,000. That's a vast difference from the million and the 40. And I'm going to bet a lot of those costs in the middle are costs that are supporting your family, right? We're not supporting our family off of just that $40,000. There's a lot of costs written into those business expenses that very fairly can help your family. Now, when we look at WCB and how it would work, they're going to base your $40,000, meaning you get about $1,500 every 2 weeks as income. They're taking off all your deductions for your CPP, your federal tax, your provincial tax, all of your deductions, meaning your take-home pay from that $40,000 is about $1,200 a week. So if you have an injury with WCB, They're paying you 90% of that, which means you're getting $1,000 every 2 weeks.
It's like
all of a sudden
25%, 25% taken off.
And that's not even based on your $1 million that's your gross revenue, right? So there's a massive gap in that. And our disability is designed to insure you on the gross revenue number as a self-employed person. So we're able to blend a lot of those costs in together, and we're not basing it on the bottom line. We're going to base it on the top. We're going to exclude some logical business expenses, but it gives you a much more realistic income that you can live your life on with your family. So keeping that in mind. Another thing that you can consider with WCB is there is a death benefit. So there's about $12,000 for funeral expenses and transportation costs. There is a survivor benefit. A full pension is paid regardless of their employment status until the youngest is 18. So there are benefits to these policies, but that certainly doesn't mean that they're everything. And a good life insurance policy could be in place for this, or a good accidental death and dismemberment policy could be in place that would be able to assist as well. So there are many things that could be in place of what WCB coverages are here if that is your main concern as well. Now, that's just the dollars and cents of WCB, right? We're just talking about how they calculate, how you have some real exposures here, how they're not really securing your income at all. But let's talk about the hours in the day they're not protecting you. WCB is accident only, on the job only. The rest of the day they're not covering. And WCB covers you for 10 hours a day. They don't care how many hours you work. And I'm going to guess that most of you are not working just 10 hours a day in those busy seasons, right? So you're still working by all measures in our reality, but not by WCB standards. So if something's going to happen to you on hour 13, it's not going to be covered, right? So that's still a massive exposure. And they get very, very nitpicky about the on and off the job thing. So it's something that we really want to make sure people are aware of, because there is those exposures. Like, I mean, traveling to work isn't included. If you were on the way to a different part, not included, even though in most reality terms, that is part of your job. So I really want people to be able to understand these are the areas there are shortfalls. When it functions well, WCB can be great. There are times that it's not designed for everybody as a solution. Now, we're going to talk a little bit about Bill 26, just in how it can really affect you and how it comes into play with this exact conversation. So this came into effect January 31st, 2020. So for small farms of 5 or less non-family employees, you have options. You can keep the WCB coverage, you can replace it with private coverage like ours, or you can cancel and have no coverage at all. All of those are entirely to your discretion. We want to make sure people are aware of protections that they could have so that they know private coverage is available. For large farms of 6 or more non-family employees, you can keep WCB or you replace it with private coverage. And that private coverage, if you come somewhere like us, like, we're going to do that coverage for you for 24 hours a day. We're not following those WCB limits. Our policies aren't designed to mirror. Our policies are designed to give you a similar benefit, generally with better terms, right? So you have the right to choose whichever you would like, just keeping in mind you should investigate all your options to see what makes the most sense for your farm, your family, and your situations.
Question. Mm-hmm. But you don't have to have both.
No.
Like, okay.
Yeah.
So you're no longer required to have WCB if you can prove that you've replaced it with something like Edge. Okay.
Yeah. And they'd be looking for a package that would have an income protection, an AD&D protection, and that's generally it. Then we could build in things that would be able to give more benefits. Because WCB also is not cheap, right? It is not a cheap coverage for people to have. So we could include things like a fracture coverage. So if they were to break a bone, they would get an immediate lump sum payout. That makes it really easy to give them something if something were to happen, and then they don't maybe ever need to get that disability money because they're going to stay working, but ow, that still hurt. So we can do some things to protect them in the middle.
Right. Okay. Yeah. Perfect.
And just to play the advocate of like people who don't necessarily know what all the acronyms stand for.
Yeah.
Sorry, but
no.
So what's AD&D?
So AD&D, sorry, that'd be accidental death and dismemberment.
Okay.
Yeah. So it's
Sorry, I'd like to assume that everyone knows what all the acronyms stand for, but I don't think so.
No, it's a great question. I mean, if you don't deal with it or you don't investigate if you ever had company benefits or anything like that, it's not a logical one. So by all means.
Yeah.
Yeah.
No worries. Thank you.
Of course. Yeah, so that's a little bit on Bill 26. It just shows you some of the options that are out there. I know that when this came into effect, a lot of people were excited about the change, but I still want to make sure people are aware of some of the comparables that you now have out there. Now, we think we have great solutions. We think that we have ways to really service exactly what you could be needing, and that can be from the highest tier to the lowest tier, and we're going to show you some of those now. So again, if you are here visually, you'll get to see some of these. Otherwise, I'll do my best to explain them, also very detailed. So we have sample packages here. These would be our guaranteed issue packages, meaning anybody could get them as long as you were working in Canada with a work permit. We would have an owner package, a hypothetical. So this could be an income replacement policy for injury only. You would get paid $2,000 per month after 30 days to age 70. It would include rehab services. It would include $10,000 for an accident support. So if you had an accident, you'd have $10,000 accessible immediately to pay for things like crutches or prescription drugs or physio bills or anything like that. It would have that accidental death and dismemberment of $200,000. There'd be medical benefits of $50,000. A fracture benefit we could add, and that would range from breaking a hand to breaking something more severe that could pay out anywhere from $250 to $6,000. And that could come in as much as $99 a month, right? And when we look at that, that's really approachable when we saw how much there is for risk out there. And I know that WCB costs much more than this. And this is an hour coverage that we're looking for 24 hours a day, right? And then if we went to a worker package, maybe they're going to do 112 days because if you're an employee, you would have EI, and EI pays you. So employment insurance will pay out if you are disabled for about 109 days. So you don't need both. So we can always wait and we'll pay you after should you still be disabled. So then you would get $2,000 a month till age 70, $100,000 in that accidental death and dismemberment. You'd have $30,000 accessible for those kind of payments like drugs, chiropractor, physio. Again, the same fracture benefit that would range from the degree of the broken bone from $250 all the way up to $6,000. And that comes in at $80.60 a month. You could have one for non-residents. We write for work permit holders. As long as they have a work permit and provincial healthcare, we're happy to help them. So we can do them 112 days that they're going to wait for that money. $2,000 a month. We'll pay that to them for 2 years, only 2 years because they're on a work permit. If they ever got their residency, we could change that. There'd be a $300,000 sum we could pay out to them if they remain on that disability policy for 2 years. It'll include rehab services to get them back to work, $50,000 in accidental death, $20,000 in those medical benefits, and that same fracture of anywhere from $250 to $6,000, which would be $65.72 a month. So these are all policies that are guaranteed, no questions asked. We're not going to get you to go to your doctor. We're not going to ask for anything crazy. We're going to get you to confirm your name, your birthday, all of those types of details, and we'd be able to get these in place right away because we want to make your lives easier as well. We don't want to make this harder or more confusing or more difficult to get set up.
I have a question.
Yeah.
So say a farm owner puts in place the farm owner package today and they need to make a claim after that 30 days. Are there any questions asked? Like, is there a possibility, does a claim go through underwriting? How does that work? If there's, because it's guaranteed issue is why I'm asking. And maybe that will just clarify some details for listeners.
For sure. So it is guaranteed issue, meaning we would underwrite it on claim. But basically what that means is we're trying to confirm that it's been an accident and we're trying to underwrite the income because we want to make sure that at that time you're able to prove to us what your income was to qualify for that benefit. We don't want to collect it when you do the application because you could do your application today and claim on this policy in 10 years. And the income you provided me today is not super helpful at that point in time. We're not going to be denying anything if it is an injury and it qualifies. The only determination they're going to be making is to make sure on these type of policies it is an injury that occurred. But there wouldn't be any declining a case if it was an injury that they had no anticipation of, things like that. I know other policies out there. I've heard of one where someone was jumping over a fence and fell and hurt themselves, hurt their leg. And an insurer came back and denied coverage because it then came out that they had carpal tunnel. That's not what we're looking to do here. So we're just making it sure it's a clear injury. If we added an illness coverage to this policy, they're just going to determine which bracket it falls within.
And to further clarify too, so anything after, like, again, farmer owner package after 30 days. So it just means like anything that happens from, okay, like right now it's October 4th and they sign up for it now and they're not really able to make a claim until November 1st, right?
No. Sorry. That's not how. So after 30 days, that's what we're going to pay you after the accident.
Oh.
Yeah.
Okay. So it's not like a waiting period.
No.
Okay.
Like you could buy the policy today because we're asking you to confirm you're in working good health today when you sign up. If something happens in 3 weeks, it doesn't mean you can't put in a claim. It means that you're going to wait 30 days to get payment from us. We can always put it at 0. 30 just tends to come in at a little bit of a lower cost because people are like, you know what, I have some emergency funds or I can figure it out for 30 days and then I'll take that payment.
That makes sense.
Yeah.
That's interesting. That's cool.
Perfect.
Because I would have read that more like the elimination period.
Yeah. So elimination period just means the amount of time from the date your injury occurs till the date you're going to start to get payment from us. Then we're going to move on to some of what is included in all of our policies that we want people to understand because it's important to know if you are interested in these, what you are getting. We have things built into ours like a partial disability benefit. So if all of a sudden you are disabled and you're unable to do one duty of your job, one important duty of your job, you would be eligible to get 50% of your benefit for 6 months. So you could still be working, but if you're unable to do one duty, we'll still pay you that for 6 months, right? A waiver of premium. So if, gosh forbid, you end up on this, after 30 days, while we're paying you, you're going to stop paying us. We're not going to continue to collect money from you on a disability claim, so we're going to start waiving our payment while we pay you. We have a return to work assistant benefit built into the policy. So if all of a sudden it would be really helpful for you if you had a certain type of chair that you really needed in order to get to do your paperwork you have to do, we're going to help do that for you. Depending on your requirement, maybe you're like, oh, if I had a walker for this part, it would be easier. Great. All of those things are built into this policy to help you return to work. But I think the best clause in it, honestly, is our accident medical reimbursement benefit, which is that $10,000. Now, if you add an accidental death and dismemberment policy, that $10,000 can go up to $100,000. It can go from $10,000 to $50,000 to $100,000, but it's $10,000 that you have access to immediately upon an accident. So say you fall off a fence tomorrow, but you have a policy that you're going to wait 112 days to get a disability benefit from. You still have access to that $10,000 tomorrow to reclaim any expenses you're caused. So if you needed to buy crutches and you needed to go to the chiropractor and physio, we're going to cover those even if we're never going to pay you a disability benefit. And that is $10,000 per accident, not per life of the policy. And those are funds that are going to help you if you do have a health and dental plan, you're not draining that plan. It's going to help you maybe get back to work a little bit easier, a little bit less in pain. Maybe if you're not working full time, it's going to take a little bit of the weight off of your shoulders because we could at least recoup some of the expenses that it's costing you.
Does that potentially include, like, if, depending on the nature of the accident, but if they needed to hire a nurse or someone to help cook or clean or anything like that?
So it wouldn't pay for any care, but some of the other policies we might talk about could have that in-home nursing coverage in it. So, yeah. But these are all the features that are included in our loss of income disability product. So it really is wide-reaching. I do want people not always to think of disability as that scary first scenario of being paralyzed. Disability could mean you just really hurt your back and you can't go to work, right? So it tends to always be our big catastrophe, but there are many, many reasons that people are unable to go to work that falls into this term. So just keeping a little bit of an open mind. Now, after we've chatted about that, these are the other options that we have to provide coverage for you for other solutions you might not know were out there. So we have a loss of income illness coverage. That is one of the products that you'll have to go through some underwriting on. So we might get a note from your doctor. There could be a blood draw, but that means then your loss of income could be protected due to an illness as well. And an illness, I don't mean something catastrophic here. I mean, maybe you ended up hurting your shoulder, but not through an accident, through some wear and tear, and you had to have surgery on your shoulder. If you're off work for that, that can be an illness and we can pay you an income. So it just tries to cover anything that's not an accident, essentially. That is why there's underwriting for it, though. We can't necessarily, if you've had 4 surgeries on your shoulder, I don't think that we can help you if you're off again. But there are lots of terms that we can do exclusions for or just provide coverage on other items. And then this is something I really, really want people to understand is we have a farm owner's business overhead expense coverage. So we talked about the income protection. I know at the beginning I said we should make sure we protect both sides. This is a plan that covers fixed expenses for you. So if you are off and you are injured and you are unable to work, maybe we have an income protection plan that's coming in. You're getting $2,000 a month for us. We don't want those $2,000 essentially going right back out to cover your expenses because then we're at the same point we started. We have an expense policy that's another reimbursement policy that we can reimburse and pay costs that are associated with your business. So these are contractual expenses. This could be lease payments. This could be insurance costs. This could be cell phone bills, car payments, anything that you're contractually obligated for. It can be staff payments for anyone who's not income producing. So if you have admin staff, they can fall under this. But the best feature in this community, we only have this for 2 industries, and this is one of them. We would never hire a replacement for a person in a normal industry, but we know that if you are off your feet and unable to work, that's really tough. So we'll be able to include the reimbursement for a replacement farmer. If you need to hire someone to come in and do the work you were doing, we'll cover that income. We'll cover that salary. So that's a great advantage that can make sure your farm's still operating, you're still bringing in an income even when you're off. On top of that, we have a critical illness coverage. That's a super simple product that we can get in place for anywhere from $75,000 to $125,000. It starts as low as $10,000 if you wanted something low. If something were to happen, you would get paid out from that potentially 3 times. We have health and dental coverages that we're going to go into a little bit more in the next slides, and then a simplified life. So those are all the options that you would have on top of everything that we've just chatted about.
What is the minimum age of a person that can be covered on Edge's policies?
18.
Including critical illness?
Yes. I mean, they could be included on a child rider if the parent had it, but a standalone policy, you have to be 18. And then most of our policies, we do issue ages to 69 or 64. Policies stay in place from anywhere from age 70 to 75.
Okay, perfect.
Yeah.
Yeah, my other question was really like, so it's a guaranteed issue. So if they had to make a claim again, is there like some sort of a waiting period or?
For which policy?
The critical illness coverage.
So for the critical illness, there is a 90-day clause for cancer. So that means you couldn't put in a cancer claim in the first 90 days. And then we have a 24-month period before and after you start the policy. So say you bought it today. Mm-hmm. So for the last 24 months, if you've had any investigation or diagnosis or anything that a doctor is monitoring that causes anything in the first 24 months, it would be excluded. If you've had no investigation, no history of anything, you're good to go. But anything that's investigated in the last 24 months would be excluded in the first 24 months of the policy. After you pass that 24-month period, any new diagnosis would be eligible.
Good to know.
Yeah. So a great example of that, like diabetes isn't a critical illness, but diabetes could cause something like organ failure, which would be. So if you had diabetes and you're being monitored for it, if kidney failure occurred in the first 24 months, it wouldn't be covered. If occurred at month 36, it would be.
Okay.
But say you were diagnosed with MS at month 8. That has nothing to do with the previous diagnosis, so you would be paid out for that.
Okay.
Yeah.
Would that work similarly to the simplified life coverage as well?
Yeah. So the simplified life coverage, there is less underrating in that, just also because the limits are lower, and it would also have a cancer clause. Now, we're going to jump into the health and dental plans because we think that these are great solutions to some of the needs that are out there, and some people don't know that these are options. So we want to make sure that you are aware of some of the fits we'd be able to have for you. So when we say multi-life, plans, we basically mean a small business plan in essence. So a health and dental plan for a group. So if you are an owner of a farm and you have some employees and some staff, these are some great ways that we think you could utilize this program. Some of the things that we're looking for is it has to be an employee-employer relationship, so you have to hire them, right? They have to be your staff. You can't be contracting them out. They can't work for themselves and you guys kind of income share. None of that. That doesn't work for this program. You have to have 3 employees on the plan to waive any underwriting. And coverage has to be mandatory for all employees. If their spouse has a plan, they don't have to get it. But you can't have a group of 10 and you're like, 5 want it, 5 don't. Those 5 are going to pay. Because generally what happens is those 5 who want it have claims to put in and the other 5 don't, which just drives the cost up for everybody. So the farm would put premiums in on the first of the month, and then they would take deductions from the staff. And the farm has to pay 50% of the health and dental premium, but you are able to write off those funds, right? So you can take them off as a taxable benefit. Now, some of the things that people don't always know is there are challenges with traditional groups for you guys versus us. So we can offer just health and dental only. I know a lot of people don't want to have that small limit life policy and a long-term disability plan and a dependent life and all of these terms that mean nothing to most of us, right? Like when you see all of those letter abbreviations on a plan for health and dental coverage, they don't mean much. You just look to be like, okay, but how much do I get for vision care, right? Like those are the pages we're looking for. So that's what we're looking to do, health and dental only. We can customize each plan after that, so we can add whatever coverage each individual wants, but our baseline is the health and dental. We also do national renewals. So I know what scares people away is those ideas that, oh man, we used our plan a lot. All of a sudden you're going to jack our prices, right? No, that's not how we're designed to work. We pull everyone across the country's plans into one pot together. It also gives us a lot of bargaining power with our insurer. So I can tell you, like this year, our increase from the year before was 3.75%. The year before that, it was 4%. So our average increases over the last 8 years has been 3.8% year over year, which when we talk about terms of inflation and how fast everything else has gone up, seems to be on the low end. So it just gives you something to budget for and something to work within, because I know sometimes pricing is what scares people out of this market. Now, what's important to know is on top of being great for your employees to have, it's what employees want. We've been able to do a lot of research into studies and reports and case studies, and benefits are one of the most important things that employees are looking for. 2 in 5 would rather have health benefits over a $25,000 raise. 50% would rather have health benefits over a $10,000 raise. And if you've never looked into this, I can tell you right now, health benefits do not cost $10,000 a person, so you're already saving money if that's the case. And it's a really crucial part of employee retention and turnover. When people are looking at jobs, 73% of them will not leave their current employer if the new company doesn't have benefits. And 76% of employees right now would leave their current job in favor of one with a better health benefits plan. I think we all know somebody who works for the government, and their line is always like, oh man, my days can be dull. I don't always love my job, but man, my benefits are good. I think we all know that person. And that's exactly what this shows, that at the end of the day, sometimes these plans really can make or break employment. But I also want you to keep in mind that small businesses without these plans have lower productivity and you could fall behind competition. Because let's use a really simple example. If someone has a cracked tooth, they can't go to the dentist. Man, they know they're going to be out of pocket. They have to wait till payday or they have to figure out something for their funds. And they're like grinning and bearing it out there working all day. They're not working at 100% because they're in pain, right? They are fighting and they are bearing it. But if they had this health and dental plan, they wouldn't have to worry about the funding of it because they would get most of that cost covered and they'd be able to go to work the next day. And there's hundreds of examples. Someone could throw out their back. Maybe they can't see because they can't get new glasses yet. There are so many examples of ways that health and dental plans can make your employees better, and it makes you better. Now, we have a lot of designs for these programs. You can do any combination. We have like 8 different functions that you could put them together. We have lots of ways that you can format these plans to make the most sense for you and your business. You can take a high-level plan, a low-level plan, or any mix in the middle. It's a massive part of the market, and we're seeing a lot of people buy this now because of how focused everyone is on wellness and health, which I think is great, but people also don't want to be out of pocket for that cost. At the end of the day, it can be costly to maintain your health and your family's health, and we want to do it in the most affordable way. So instead of saving up to go to that dentist and be like, oh, it's going to be $800 this month, let's spread out that payment over the year into these health and dental plans. That's going to save them money. Now, I want you guys to know other important things about this because there are benefits with our program versus others. So in most terms, there's coverages that are for single and for family, which is great, single and family. We also have a coverage for a couple, and that can be two things. That can be a spousal relationship or just like a couple is in a pair. So maybe you have a single mom and a child, a single dad and a child. Maybe everyone else is out of the house and now it's just the mom and the dad. There can be any combination of two people that we can set up that way, where a lot of other plans will deem that to be family. So you're going to be paying way more. And then when we talk about our family coverage, our families do not charge per dependent. So it does not matter for us how many kids you have, you're not paying more. A lot of other plans, once you hit over 2, you're going to pay per person. So for those of you out there with big families, we would be a wonderful fit. Now, we're going to round this up with how simple it is. I know how hard you work, and I don't need to make you work harder just to get these things set up. So we want to make sure that you know that we're not trying to make things more difficult. We want to work with you on your timetable. So making this as seamless as possible, our applications are 100% electronic. You don't have to fill out anything in person. You don't have to fill out anything paper-wise. Our turnaround times are industry leading. If you really wanted coverage and you're going to set it up, maybe you're going to call Winnie today. By tomorrow, we can get that date approved. Our system's entirely secure and it's available 24/7. We know you don't work normal hours. I know that if we tried to call you at noon on a Tuesday, it's probably going to be tough. So if we have to do this at 9 p.m. on a Tuesday night, that works too. We really want to make this work with how you work. We want to meet you where you are. So that is all that I have for you from my little spiel, in case Winnie or Lacey have any questions or anything to clarify.
Little. This whole last 40 minutes really has packed a lot of punch in terms of lots of things to consider. Yet, when you shared your story originally, about the rancher and how it changed everything for them, I love that story. It hits home, I'm sure. Like I don't even have to be in the ranching world. It just hits home so much when I think about what happened and what could have been prevented and what they could have done instead. I would also share, I think, a lot of farmers and ranchers that Lacey and I talk to as well. Sometimes it's like quite often one of the easiest reasons not to do this is I'm just too busy.
Yeah, so I just was going to speak to, so since the last time we met with you, Taryn, I did take advantage of the critical illness that is offered by Edge. And just to speak to the simplified electronic application, I looked it over at 6:00 in the morning when I was having my coffee, and it truly was simple. So yeah, I guess just a testament to that. But the other part is what is appealing about this for me, because, we are ranchers, my husband and I live very rurally, is the cost. It seems like this is cost effective, could fit into a lot of people's cash flow because, a lot of times in this industry, there's a lot of assets, but not a lot of cash flow at times. So this seems to be something that could fit into most anyone's cash flow. So I'm looking forward to looking more into it and to helping our clients as well.
Awesome. Yeah, our goal is to be approachable and we want to meet you where you are, whether that's a low level to start or just expense coverage to start, or if you're ready to get the whole shebang to make sure that your family and your farm's protected if something happens to you.
Well, I think Edge has done a really great job in being able to back that statement up, especially with accessibility of 24/7. That's something that Lacey and I don't, we're not available to our clients 24/7, but I'm glad that getting set up and creating peace of mind in just one aspect of their business can be that easy.
Yeah.
Right? Yeah, indeed. So much more to say, yet just really appreciate your time Taryn, and thank you for doing such a great job going over all of this. Lacey, if you want to take it away and we'll end it.
Yeah. So Taryn, thank you for that information. I think to our listeners, if this is something that an episode that you find yourself maybe like, oh, okay, I have no idea what they're talking about, I just encourage you, contact us, rancherway.com. You can get access to us because you don't know what you don't know. And this might be something that does help provide that peace of mind to you and your operation. So thank you for listening. Thank you to Taryn for being here with us. You can find everything that you need to know and how to get in contact with us at our website, rancherway.com. Check us out on Apple, Spotify, iHeartRadio, and watch us on YouTube. Thanks, guys.
Thanks so much, everybody.
So glad you leaned in with us on the Win-A podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.